the opening bell is starting the trading day at the New York Stock Exchange, where nervous investors are waiting to see how President Trump's trade war will play out. U.S. stock futures tumbled for a second day, with Dow futures losing 1,100 points this morning as China retaliates against President Trump's sweeping tariffs announcement. The country said it plans to impose a 34% levy on all U.S. products, matching the Trump tariffs. The brewing trade war is sparking fears of a global recession. NBC News business and data correspondent Brian Cheung is here with the latest. Brian, the markets just opened. Where do things stand? What are you looking for right now?
Yeah, we were just looking at that Dow board, the Dow Jones Industrial Average opening down 2.3% in points. That's almost 950 points. The S&P 500, which is largely seen as a more broad-based measure of the overall stock market, fell by about the same 2.4% I'm looking at right now. And the tech-heavy NASDAQ composite, that'll include companies like Meta and Google and what have you, that's down by 3%. So this is the second in a back-to-back round of days in response to that announcement in the Rose Garden of those reciprocal tariffs. And it is just looking like another ugly day to end what has been a really ugly week. I think that the news development of that Chinese reciprocal tariff of, trying to slap on that over 30% tariff on American goods is a big story behind this, because, again, this is essentially the beginning of this tariff war, as other countries were still waiting on retaliatory action from potentially the European Union. Canada announced yesterday they were going to be doing auto tariffs on American cars going into Canada as well. So this is just the beginning of all of this. And the jobs report that we got this morning, I don't think it did too much to help.
So much of this is still actively unfolding. Do we have any sense around what companies or sectors are being hardest hit right now?
I mean, Emily, it just, quite frankly, it appears to be really broad-based. It seems like every industry, every potential corner of the stock market. There are a few winners yesterday. I think some fast food companies and maybe some defensive stocks, what they call basically the recession-proof ones, where if people start to buy discount or they start to buy canned soup, we see similar plays happen in the past in 2008 during the pandemic as well. But for the most part, it's very broad-based. Again, every measure of this. The Russell 2000 is another stock market measure that includes smaller companies that are still publicly traded. That had, I believe, is in bear market territory, which is when it falls by 20% from its most recent highs. But I think the NASDAQ is kind of the big tell here, because, again, that's a tech-heavy sector that we're talking about that's now down 2.8%, just a little bit better than when we spoke a minute ago about this. But we're talking about Google and Meta, companies that don't export physical hard goods.
Yeah,
and when we talk about tariffs, those are tariffs on things that physically get imported into the United States. So when you see tech stocks selling off, that tells you investors broadly are trying to get out of what they call risk assets. They don't want to hold stocks at all. They just want to put everything into cash, basically hunker down during what could be a bumpy period of investment. And I think people looking at their 401ks probably have the same level of anxiety.
Yeah, absolutely. A really tumultuous time. I know you've been speaking with business owners of small businesses to large businesses.
Yeah.
What are you hearing?
Yeah, well, what I'm hearing right now from small businesses and large businesses is the same thing, actually. Whether you're a large Fortune 500 company or you're a small business that builds things in Ohio, you are just uncertain about what's going on. And let's say, for example, even under the charitable kind of interpretation of what the Trump administration is doing, which is we want to tariff things coming into this country to protect American manufacturing and incentivize businesses to build up plants in the United States instead of manufacturing that teddy bear in China, manufacture here in the United States. But Emily, the problem is that it could take years to build the factory to then make those types of products in the United States, and then another few years to actually hire for it and then get it running. So for that reason, a lot of these businesses are saying, look, if I have to think about budgeting out for the next 5 to 10 years for that type of what they call capital expenditure, I just don't know if I'm going to do that, because first off, this might be a new administration or someone else in the White House 3 years from now, essentially, and I might not want to put up millions of dollars in expenditure right now. So people don't know how to plan for this. People don't know how to strategize for this. And I think that whether you're a company like an automaker or you're a small company that sells toys in the United States, I've been hearing that uncertainty is what's weighing on management.
Some other numbers that we are watching today, new jobs report out, beating expectations. Does that do anything for easing concerns on Wall Street?
Yeah, and let's just call it what it is. That jobs report, which covers the month of March, so this is a report that's backwards looking. It basically tells us what the state of affairs look like in the middle of March in this country. It looks good. The unemployment rate at 4.2%. That is essentially near where we were, in the prior reports. The job gains in terms of the monthly added payrolls was over 200,000. In fact, economists had expected something a little closer to 140,000 for the month. And it seemed like the job gains were relatively broad-based across the economy. So the labor market still looks pretty good. And I do want to point out that when we looked at market futures before the market open because that report was released around 8:30 Eastern time.
Yep.
We did see market futures kind of slip back up. It looked like maybe we would recover some of those losses, but here we are again, about 4 minutes into the market open, and it looks like everything is still deeply in the red. S&P 500 down 2.7, Dow down 2.4, NASDAQ down over 3%. It's just looking like another ugly day.
And those China retaliatory tariffs definitely playing a role in that. President Trump seems pretty confident that in the end, this will result in some favorable deals for the U.S. Are there any signs that these negotiations are happening yet?
Yeah, and this is where the kind of story here is very confusing because I was on a call with White House officials when they were talking and unveiling these so-called reciprocal tariffs just 2 days ago, and they were saying very clearly to reporters, they are not open for negotiations. This was going to be a long-term tariff that was going to be put in place to try to bring American manufacturing back. But then you had President Trump on Air Force One on his way down to, I believe, Mar-a-Lago yesterday saying that he is open for negotiations. And if he gets I think phenomenal was the word that he used, if he gets a phenomenal deal, then he's open to relieving some countries of these tariffs. So the messaging is a little bit mixed on whether or not he is open for negotiation, but it seems like for right now, countries, at least the big ones that we've been tracking, have not been trying to they're not going to the negotiation table. They're just slapping retaliatory tariffs on. So China is the one big example, and I just cannot underscore how important and significant that is because what are the two largest economies in the world? It's China and the United States that are now going at war with each other, at least in an economic sense. So that's very significant. The European Union is another shoe we're expecting to drop. And then Canada, again, yesterday announcing, all right, you're going to slap 25% tariffs on our automotive products going into your country, which, by the way, are made many times by American manufacturers like Ford and GM. Well, all right, now they're going to slap a 25% tariff on American cars going into Canada.
You know, I think to say this has been a tumultuous week is almost an understatement. What does the timeline look here? Is it going to continue these roller coaster type of emotions on Wall Street?
I mean, Emily, I wish I knew, and I think so do regular Americans that are looking at their 401ks or looking at their stock portfolios. The problem with the volatility here, and I've also been talking with a number of stock traders. You know, I've been on the stock exchange floor talking to folks and just asking, when do you think we're going to hit the bottom? I think that's the question that a lot of people are asking. We just don't know. And we won't likely hit a bottom until we get more clarity on this tariff war that's just escalating seemingly by the hour. It doesn't seem like we're any closer to resolving the tariff relationships with the United States and every country around the world now than we were even prior to the April 2nd announcement. So until we get more clarity on that, the volatility is likely going to continue in the stock market.
Yeah, by the hour, you're right about that. Brian, thank you so much.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.